Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A gapping lower move yesterday, closing well clear below all the moving averages, bar the long moving average, which is currently at 68.53, which was also tested very heavily yesterday, but which saw a close still above it. We now have a big gap overhead between 70.26 and 69.47. We're closed now also below the recent 50% Fibonacci line at 69.76. Perhaps more importantly though, in the greater scheme of things, we're also set with still a week and a bit to go to possibly have a monthly key reversal here. If we close on Thursday the 30th, either over 70.97 or under 69.66, then we'd be on. Right now we're looking at a monthly key reversal down, but barely. So far today, a reactionary move back up, opening higher, moving into the large gap overhead, but only by really a little. We still have the recent 50% Fibonacci line above at 69.76 as resistance. German DAX futures. A gapping lower bearish black Mariposa yesterday. That was also in its own way a fall for bearish black crow and more than a suitable follow-on to last Friday's bearish engulfing pattern and outside day. We now have a gap between 15.579 down to 15.493. The drop down was obviously below the flatlining medium moving average, currently 15.604, but also down below the May to date uptrend, currently at 15.250, and all the way down until it most interestingly halted at the old September to December 2020 reverse head and shoulders neckline, currently at 15.013, dead on it. I suspect that this was in turn also supported by the nearby rising long moving average, currently at 14.949, and that's why we halted there, closing well over it. One other interesting point here, there is no monthly key reversal possible here at this time, as opposed to what we've seen in some other stock index futures. So far today, a reactionary open higher within yesterday's main body of action, moving back up over the broken May to date uptrend, but also far looking like it might be just a bullish harami right now. US E-mini S&P futures. A gapping lower, a significant gapping lower bearish black crow, the third in a row, and a follow-on to the bearish hanging man pattern seen last Thursday. We now have a gap 44.59 down to 44.18. The market also effectively gapped out on the downside from the recent July to date rising wedge pattern and easily punched through the target for such a pattern at 43.97 on the same day. The drop also gapped below what had seemingly been good support from the short medium moving average, currently at 44.44, as well as the old lower and upper trend lines, currently 43.46 and 43.66 respectively, of the previous rising wedge pattern between May and August. Plus the coincident gently rising medium moving average, currently 43.45. It ended up halting in what seems thin air, but the close yesterday was notably back above the old upper trend line and the coincident medium moving average. Finally, this is one of those stock index futures that has done enough to make, with a week and a bit to go, to make a possible monthly key reversal in September. If we close on Thursday the 30th of September either over 45.21 or under 43.89, then we'd be on. Right now we are barely looking at a monthly key reversal down. So far today, a little lower open, testing once again the combination of the medium moving average and the upper trend line, but then swiftly moving back up into yesterday's main body of action. And right now looking like a possible bullish thrusting type pattern today. French CAC 40 futures. Like everywhere before, yesterday saw a gapping lower bearish black crow, in this case a second one, but coming as it did after last Thursday's bearish inverted hammer pattern and Friday's outside day. The market gap below the gently rising medium moving average, currently at 65.71, peaking at a lesser Fibonacci level below at 64.94 and dropping down to almost on the old projected 50% Fibonacci line at 63.48 before bouncing back up. We nevertheless ended lower, but also looking like a possible hammer pattern as well. It also brings to mind something I've been thinking about in recent days, that the June to date action is a possible diamond top. If this turns out to be the case, then we have a potential target X in the 62.42 area. It is far from a perfect diamond, especially as the low was formed before the high of the diamond. However, it is still there. Nevertheless, anyway, this contract shares something with the DAX. It does not currently qualify to be a monthly key reversal. Not yet. So far today, a slightly higher open and then a move upwards. Quite a good move upwards, well into the gapping territory, but it still has quite a way to go, and it now has to deal with the capping action seen of the medium moving average overhead. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.